The One Big Beautiful Bill Act, or known as OBA, is a sweeping new law that wraps together core parts of President Trump's agenda. Broadly speaking, it extends major tax cuts for families and businesses, rolls back certain regulations, and pours funding into things like border security and defense. Think of it as an everything and the kitchen sink bill, from taxes to energy to immigration. Despite its breadth, today we're zooming on one slice: e-commerce. If you sell or shop online, this law brings some important changes and non-changes for you. Let's break down the key points. Number one, end of $800 duty-free import exemption, aka de minimis rule. One headline change: the law repeals the de minimis import exemption. That let shipments under $800 enter the US tariff-free. In plain English, this was the rule that if you ordered something small from overseas valued under $800, it usually skipped import duties. That perk is now on the way out. However, it's not vanishing overnight. The rollout is gradual, with the final phase-in by July 1st, 2027. This gives businesses and customs time to adjust. By 2027, if you're buying cheap gadgets from goods from abroad, it's going to be subject to duties and taxes, even a low-value package. Cross-border online shipping could get a bit pricier or slower as a result, since more shipments will require formal custom processing. E-commerce sellers importing products in bulk will also need to factor in those costs, which could mean change in pricing and sourcing strategy. Keep in mind that for China and Hong Kong, de minimis was suspended on May 2nd, 2025, and that will become permanent now. If you are an overseas e-commerce with your customer base in the US, it might be a good time to consider moving your business into the US. Number two, higher 1099K threshold and relief for online sellers. Now for some good news for online sellers. 1099K tax reporting is getting a fix. The OBA raises the IRS reporting threshold for online payments back up to $20,000 in total sales and 200 transactions per year. Why does it matter? Well, a couple of years ago, the threshold was slashed to mere $600, meaning even a small hobby seller could get with tax forms. It caused a lot of confusion and paperwork for casual sellers on eBay, Etsy, etc. Now, with the OBA's change, small sellers won't receive a 1099K unless they exceed the $20,000 in sales and 200 transactions in a year. This is essentially a return to the pre-2021 rules, sparing many part-time sellers from unnecessary tax forms. In short, if you only sell a few things online as a side gig, you likely won't trigger an IRS form now. You'll still owe taxes on any income, of course, but at least paperwork burden is lighter. Number three, sales taxes stay the same. No new federal changes. If you're hoping this big law simplified online sales taxes, well, it did not. The OBA doesn't change anything about sales taxes, collections obligations, and remitting. Ever since the Supreme Court's waiver decision in 2018, states can require out-of-state sellers to collect sales tax if you surpass certain sales threshold, often $100,000 in sales or 200 transactions. That system is still in place. The new federal law preserves the status quo on sales taxes, meaning online businesses must still comply with each state's rules where they have enough sales. Number four, a missed chance on estate income taxes for online businesses. Let's touch on something that almost happened. The House's version of the bill tried to give online sellers extra protection from having to pay estate income taxes in states where they're not physically present. Basically, it would have expanded a 1950 law called PL 86-272 that protects businesses from estate income taxes if they're only soliciting orders across the state lines. The idea was to update soliciting orders to clearly cover typical internet business activities. So, states could not tax a small seller just for having a website or cookies on users' browsers in that state. However, this provision got dropped in the final bill. The Senate removed it and it didn't make the cut. So, For now, nothing really changed with the state income tax nexus. If your only connection to a state is selling tangible goods online, you might already be protected by the old law in some cases. But the states are aggressively redefining what online activities break that protection. The OBA didn't end that debate, actually. Online businesses still need to watch their economic footprints in each state. Large states like California and New York are pushing the envelope on taxing online sellers' income. For example, saying things like web cookies or apps constitute nexus. For practical purposes, if you're an out-of-state seller, you still should consult a tax professional about whether you might owe any income taxes in that state. Number 5, tax cuts may lead to more consumer spending. One broader effect of the bill that could indirectly help e-commerce are tax cuts for consumers. The OBA extended the 2017 income tax rate cuts that were set up to expire in 2026 and even bumped some of them higher with more benefits like a slightly bigger child tax credit and new deductions for certain workers. In theory, putting more money back in people's wallets should boost consumer spending. So, what does the One Big Beautiful Bill means for e-commerce over the next few years? First, higher hurdle on duty-free imports. Second, simplified tax reporting for small sellers. Third, sales tax and estate taxes, which remain unchanged. Next one is potential boost for consumer spending. In conclusion, over the next few years, online sellers should prepare for a world where importing is a bit more regulated, but tax admin is a tad easier for small fish. Consumers will navigate a slightly different pricing dynamics. Cross-border shopping might shift, meaning less dropshipping of ultra-cheap items without duties, and US shoppers might focus more on domestic retailers or factors in those duties at the checkout. For e-commerce entrepreneurs, the name of the game is adaptability. Ensure your systems are ready for the new import rules by 2027. Enjoy the lighter 1099-K burden, but still keep good records as taxes aren't going away. And continue staying compliant with estate taxes because Uncle Sam left that ball in the state's court. In summary, be prepared, keep an eye on those timelines, and consult your tax advisors when you are in doubt, and you'll be well positioned to thrive in the evolving e-commerce landscape. Thanks for watching, and may your online business continue to grow in this big, beautiful new era for e-commerce. Thank you for watching. To stay up to date about the future of e-commerce finances, please subscribe to our channel and don't forget to follow us on social media at ecomhaus.